G'day and welcome to the Morgans Edward Street Weekly Wrap. It is the last week of November, a month that several investors would wish to forget. For more, I'll pass you over to Chris.
Thanks, Cameron. It's been a strong week in the markets, with the Dow Jones moving up from 24,286 points to over 25,000 points. This was driven by a speech from Federal Reserve Chairman Jerome Powell that said gradual interest rate hikes should balance risks as the Fed tries to keep the economy on track. This was viewed as a positive from the market, as consensus was for further rate hikes in the near term. In corporate news, Salesforce rose by over 15% after reporting a better than expected third quarter result, while luxury retailer Tiffany & Co. tumbled 12% to a one-year low as the company blamed reduced spending by the Chinese and a weaker Japanese demand profile. European markets were weaker, with banking sector issues at the forefront due to fears that the Brexit deal could fall over. In commodity markets, oil was in the news with a 14-month low being hit. This was driven by the Energy Information Administration reporting that domestic crude supplies rose by 3.6 million barrels for the week ended 23rd November, the 10th consecutive weekly build, and against analysts' expectations for a 500k barrel decline. Base metals rallied, especially copper, as news that BHP's Spencer mine in Chile had entered a rolling strike which has knocked supply around. In Australian corporate news, consumer lending company Afterpay will be subject to an asset review, which was widely expected by the market, and as such, the stock has risen by over 20% so far this week. And that's in a market that otherwise felt pretty tough. Recently floated coal company Coronado has emerged from research blackout, with many research houses putting it on a buy recommendation based on the annual yield. Poker machine maker Aristocrat reported yesterday, showing a 34% growth in earnings, which was in line with consensus. Aristocrat opened heavily down yesterday, but finished the day down around 2.5%. I'll now throw to Cameron to hear what stock has caught his eye this week and how to best position portfolios leading into the Christmas break.
Thanks, Chris. The big news this week has been the demerger of Coles away from Wesfarmers, and I've used this as an opportunity to sell Coles and reinvest the funds into Wesfarmers for the following reasons. Firstly, the rising competition. The potential threat from international players coming to our shores will most likely restrict margins and change the supermarket industry, which has previously been dominated by Coles and Woolworths. The threats include Lidl, as well as Amazon Fresh. In addition, we have also seen Woolworths and Aldi stealing market share from Coles over recent years. My second reason is Coles is a low growth business. Wesfarmers' non-supermarket businesses have been the growth driver of returns for the portfolio over recent years. Coles will struggle, in my view, to generate any sort of growth without the higher margin businesses such as Bunnings and Officeworks. Low growth means an unsustainable dividend return, and we have seen the impact of this in businesses such as Telstra over the past 12 months. My third reason is the smaller holdings in portfolios. The demerger between Wesfarmers and Coles means you'll receive one share in Coles for every one share held in Wesfarmers. Coles is roughly priced around $12.50, with Wesfarmers now around $31. Due to the arrangement of the offer, this will leave a Coles holding which is roughly 1/3 the value of your original Wesfarmers holding. This in most cases will leave a smaller and more insignificant holding in your portfolio. My fourth and final reason was when Wesfarmers is selling their non-performing and non-core businesses. And if Wesfarmers management doesn't want to retain this business, then I guess why should you? In agreement with my view is our Morgans analyst, which has a $12.50 price target on Coles and a hold recommendation, whilst Wesfarmers boasts an add recommendation with a $33.64 price target. Thanks, Chris.
Thanks, Cameron. That wraps up another week. Please remember that our comments in the video are general in nature, and please speak to your Edward Street advisor if you wish to know if any of the stock recommendations suit your personal needs and objectives. We'll see you next week.